Hi, this is Dave Arnold. Welcome back to News Talk 980 CJME. We are doing the Personal Finance Show with Trustedsaskatoon.com. Sarah Wheelwright from Trustedsaskatoon.com. People joining us maybe just partway through the program. Tell us a bit about Trustedsaskatoon.com.
Trustedsaskatoon.com is here to help you. We're here to help you find great businesses. We are a platform to connect the consumer that wants to deal with businesses that look after them with businesses that want to look after people. So it's a really great place to be. In fact, I don't know why you'd look anywhere else.
We're going to continue with our guests here. We've got three guests as well that have been in the studio. Speaking right now with Jason Dornstadter from Focus Mortgage Solutions. Jason, of course, we do have the questions that come in through Facebook, the Facebook page for Trustedsaskatoon.com. Are you ready?
I'm nervous.
Oh,
I'm actually not nervous.
I'm betting you nail these, but I'm going to put you on the spot here.
Okay, that's good.
This one is from Chris. What's the difference between fixed rate, variable rate, and adjustable rate mortgages?
Give me 1 second. I'm going to Google it. I'm such a jerk. No, the difference actually, believe it or not, they are three separate items. And a lot of people confuse adjustable and variable. So first off, the fixed mortgage rate is just that. It's fixed. It's unmoving. It's like a nail in the wall. It's there. The adjustable and variable gets a little more confusing, and it's unfortunate, but most banks and most brokers honestly don't even realize they're two different things. They just think it's a different way of saying the same thing. Mm-hmm. First and foremost, an adjustable rate mortgage is the one that we're typically seeing today. And this is where the mortgage rate is based on prime. And as prime should move, as set by the Bank of Canada, the interest rate that you have will also correspond in that same capacity. And it'll also move. So if the prime rate of Canada goes up by 1/4 point, your mortgage interest rate will also go up by 1/4 point. That also means your mortgage payment will go up by 1/4 point, respectively. Mm-hmm. And the reason it does that is to keep the principal and the interest component in line for the end result of your term expiring. Variable mortgages are different in the fact that they decide at the end of the year how much you've paid principal and how much interest, depending on how much the interest rates have actually moved based on prime. Variable rate mortgages may mean at the end of the year you get what's called a balloon payment, which means more money out of your pocket to catch up to where you should be. So don't get a variable mortgage. It's a little dangerous. Mm-hmm. Get an adjustable rate mortgage or a fixed mortgage.
All right, let's go on to the next question. This one's from Anne. I know you're penalized if you sell too early, but what if you suddenly come into some money? Can you pay off your mortgage without penalty?
No. Thank you for your question.
There we go.
No, actually, very quickly, mortgages are contracts. If you breach that contract for any reason, if you come into money, if you refinance, if you sell it, doesn't matter. You will pay a penalty because you're breaking a contract. Mm-hmm. Simple enough.
But there are some options when in that initial stage where you set up where you can make an extra payment perhaps on the anniversary of this. But those are the types of options that people can sit down and discuss with you, and you can literally tailor it to their income patterns and what they're trying to get out of it.
Absolutely. When we sit down with a client, we make sure we look at every aspect. I mean, a 3-year mortgage makes sense for a person who's going to be living in their house for 3 years. It doesn't make sense for someone who's going to be selling it in 6 months. So we look at all aspects, especially when we consider penalties.
Another question, this one from Wanda. With regards to obtaining a mortgage, what's the difference between a chartered bank and mortgage brokers?
This is my favorite question. All I can say is, Wanda, thank you for giving me the opportunity to spout off on radio about this. Very simply, banks are exactly like 7-Eleven. Brokers are set up to be like Costco. 7-Eleven is set up with wonderful retail convenience items, but consider going and buying your week's worth of groceries there, and consider the options you have if you were to take that money and go to Costco. Yes, it's set up for convenience. You could probably find what you need to sustain life, but you're going to pay dearly for it. Banks are set up as convenience items. Come on in, get everything you need right here, right now. Here's some weak orange juice and an old cookie. We'll be right with you. Brokers are set up with more options, more products, and we're priced considerably lower than any charter. For instance, I looked up the posted 5-year rate for most chartered banks. Today it's 3.99%. My rate is 2.99%.
Wow.
It doesn't matter how long you've been a customer of your chartered bank. They're going to try to grind you up for their maximum pay because they get paid on the volumes and the pricing of those volumes. We get paid strictly on volume. By the lenders themselves, so quite honestly,
not by the consumer.
Yeah, we can just throw out these low interest rate mortgages with all the privileges and more privileges than most would expect, and at the same time doing a huge justice for people that are in that position that are paying a mortgage.
Well, we're going to wrap on a great question with you. Jason, thanks for coming in. Much appreciated.
My absolute pleasure again.
Jason Dornstadter from Focus Mortgage Solutions, and Also joining us for the program, patiently waiting in the fourth chair, Stephen Barlow from Dusyk Barlow. Stephen, thanks for coming in.
Thanks for having me.
Tell us a little bit about Dusyk Barlow.
Dusyk Barlow, it's been around since '93. However, the Barlows and Dusyks have been around in the insurance business. Barlows have been around since '36, and Brian Dusyk started his own firm in '76, which in '93 we got together and formed Dusyk Barlow. It's a family business. I'm actually the fourth generation in this business.
Wow.
So yeah, it's a great carry on the tradition, and we'll hope it goes for another 75 years.
Yeah.
So this is kind of more like I'm using the Capulets as opposed to the Hatfield and McCoys, and this was a very nice merger. It worked out very nicely for you.
Yeah, they worked together, like our family and the Dusyk worked together back in the day. So yeah, they've been known to each other for quite a long time. So yeah, it's great.
Well, it's fascinating when you bring that lineage and that experience from two different organizations and two different families and incorporate like-minded values and approaches. It's what a winner.
Yeah, it's wonderful to work there, and like I said, it's mostly family, which is nice. And we treat it as a family business, so it doesn't matter if you're a Barlow, a Dusyk, or a staff member. You're all family. So yeah.
Ready for some questions?
I am.
All right, here we go. Oh, I got one for you. Let's see if you can wrap this one up. This is this question from Anne. What exactly is no-fault insurance? I think there's a lot of misconceptions about this.
That is a great question, and you're right. There is a huge misconception among the public. First off, this should never have been called no fault. Reason people think that no fault is they get into an accident. I'm not at fault. Awesome. That's not the way it works. What the intent of this is it didn't matter who was at fault for the accident, whether it be a one vehicle accident or a two multi-vehicle accident. There's benefits to each party, and that's the intent of it. Is you've got some medical coverage, some rehabilitation, loss of income, that kind of stuff. Then a few years ago, SGI Auto Fund did bring out the option of the tort. So now you've got two systems where you've got to really sit down with the customer and explain what the differences are.
Advantages and disadvantages to each, pros and cons to each.
There are.
That's the bottom line.
Yeah, and that's exactly it. No fault. Benefits are a little higher, but you don't have the ability to sue for pain and suffering. Tort, your benefits are capped, but now you have that ability to sue for pain and suffering. So you've got to get the client or the customer to come in to sit down. Insurance is pretty dry, unfortunately.
But you make it exciting.
We do. That's what we try and do, and that's why it's not something you can just buy online kind of thing. You've got to come in and see us. So.
It's really important because if people don't realize that they don't have the coverage that they think they have, they can find themselves in a real tough spot.
Right.
Secret is come in, explain exactly what they're looking for, what their lifestyle is, what they expect, and you can get them set up.
Yeah.
Bottom line.
Yep.
Stephen, great chatting with you.
Thanks very much.
Do you know what? We have goodies to give away here now. This is so we're going to draw it randomly from one of the questions that was asked. This is for an Apple TV, $100 gift certificate to Crave, $100 gift certificate to Gulf Steakhouse as well. And one of our questions, let's see, Wanda. Congratulations, Wanda. This is the question that Jason answered on the difference between charter bank and mortgage brokers. So
his favorite question.
Favorite question. You can, of course, ask questions for future programs by going on Facebook, Trustedsaskatoon.com Facebook page. Ask your questions there. Tons more information there as well. So.
Absolutely. And if you're catching the end of this show or you want to listen to previous shows that we've done and all of the subjects, then please go to Trustedsaskatoon.com and you click on the YouTube button and you'll be able to find all of the shows on YouTube too.
Thanks to everyone for coming in. Sarah, of course, from Trustedsaskatoon.com. Stephen Barlow from Dusyk Barlow Insurance. Jason Dornstadter from Focus Mortgage Solutions. And Chris Warby from Warby Wealth Management. This is Dave Arnold. You've been listening to News Talk 980 CJME.